The purpose of Wealth Talk is to educate, inform, and hopefully entertain you on the subject of building your wealth. Wealth Builders recommends you should always take independent financial, tax, or legal advice before making any decisions around your finances.
Welcome to episode 102 of Wealth Talk. My name's Christian Rodwell, the Membership Director for Wealth Builders, and I'm joined today by Mr. Kevin Whelan, our founder. How are you, Kevin?
Hello, Chris. You changed the order a little bit around.
I did. I'd like to mix it up, bit of variation as we move into our next phase.
Yeah, you foxed me a little bit there. But then again, we did have a little bit of a get-together, didn't we, earlier this week for a little game of golf on a day that looked like it was snowing, and then the sun came out and bathed us beautifully, and we had a fantastic time. Just shame about your golf, Chris, really.
Hey, I thought I actually played pretty good. I'm seeing some progress at last. No, it was good. It was really good. We had some strategy in the office with Paul Brooks, our SSAS director, and then out on the green in the afternoon. Very nice way to start the week.
It was indeed, yeah.
So today we are inviting good friend of Wealth Builders, Mr. Simon Zutshi, to come back and share again his views on the market. And it was, as you'll hear, back in 2019, September, when we last invited Simon. And of course, we don't need to say all the stuff that's happened in between.
No, but that was, if I remember rightly, that was up at the Gherkin, I think, in central London, wasn't it? We had a little cup of tea, and I think you just interviewed Simon and I having a chin wag, and that was. But crumbs, so much has changed since then, for all sorts of reasons, and good news for him. He's had good news on a personal front, hasn't he? And good news from a business angle, and I would count Simon as one of those rare people. He's a friend. He's got incredible integrity. He's a friend of Wealth Builders too. And I'm also pleased to say a client. He's worked with me before, and I'm always delighted to chat with him. And we have regular conversations. And while most of the time, Chris, he does get it right, on this time, he got it wrong, didn't he?
Well, yes. And we'll hear more about that in a moment from Simon, of course. But I'm guessing most people listening right now that you've probably heard of Simon. However, he is the founder of the Property Investor Network, so one of the largest UK property training and networking companies in the UK. And that was established back in 2003. He's also the author of Property Magic, which is always up there on Amazon as one of the best-selling property books, and packed full of information. We often hand out copies and point people in that direction, don't we, Kevin?
We do indeed, yeah. Definitely an organisation that we like and we resonate with him and his values. And of course, there are many other training organisations in this country and others, but check any kind of training out, just see who you resonate with. And definitely we resonate with Simon here at Wealth Builders.
Okay, so let's not wait around. Let's head on over to our conversation today with Mr. Simon Zutshi. Simon, welcome back to Wealth Talk today.
Thank you, Christian. Really good to be back.
It's good, isn't it? Well, I was looking back, and it was Wealth Talk 27 back in September 2019 when you...
Wow.
You remember we were with Kevin, we were in London, we had the backdrop there, and wow, what a lot has been going on since then.
Well, the world has changed. Who would have thought that the world could change and so many things could happen since between then and now, eh?
Exactly. Crazy. And a few extra things have happened for you as well, Simon, recently, I think, which have been pretty big life changes. So
I got married, which was pretty good. We were thinking about getting married last year, and then obviously COVID hit. And then my partner, Nav, is my wife now, she was kind of speaking to the registry office to find out when we could get back, because you could only do registry offices, and not kind of wedding I'd really planned. But then she came in one day and said, I've got a date. I said, when? And she gave me the date. I said, I can't do that day. I've got mastermind. She said, no, we're doing that date. So we had to jiggle things around a bit, and it was a very quick in and out. You can't hang around. There's only 4 people. So we're going to have a big Indian wedding probably next year on the anniversary, just to have a proper celebration. But yeah, that was really good.
Yeah, congratulations on that. And then the other big news is, of course, the evolution of PIN. Now, just before we you share the big news, when you started PIN back in 2003, Simon, did you ever imagine that kind of 18 years later, you would be in a position to sell, for 8 figures. And, we talk about starting with the end in mind, but did you ever envisage anything like that?
No, I didn't, to be honest. I set the meeting up for very personal self-interest, really, in that I'd done okay in property by then. I'd been investing for about 8 years. I'd managed to leave my full-time job at Cadbury's. But you know what? I'd also made lots of mistakes, and I was starting to invest in myself a couple of years before, and I learned all about the importance of an environment, getting like-minded people around you. And I kind of realized that although I'd done quite well, I probably would have done much better if I had like-minded people around me so I could learn from them, because none of my friends were investing. They were all still working. None of my family had really invested apart from their own homes. And I really wanted to get that kind of community. And I was going to breakfast network meetings for business, where I was meeting a great solicitor, mortgage broker, accountant, everyone I needed for my property business. But none of them actually owned investment property. They had their own homes, but they didn't really understand what I was going through. And I wanted to, it can be quite lonely investing in property, especially if family and friends don't really get it. So I went online and there was nothing available. So that's why I started the very first networking in the UK for property investment, kind of the pioneer of it, really. So it's great 18 years later. That's kind of been recognised, and someone's come along and seen the value, and they're buying the business with the intent of actually growing it all around the world. So I'm still staying on as CEO for probably 3 years, maybe a bit longer, who knows. And it's going to be really exciting to take it to the next level. So it's very exciting, but it's pretty nice reward, really.
Yeah, no, well done for that. And it's obviously a mutual friend of ours, Roger Hamilton, and the Genius Group. Of course, we talk about Wealth Dynamics all the time. All of our members take the Wealth Dynamics assessment, as do members of PIN Mastermind.
Absolutely,
well.
yes. Yeah, that's that right. It's such a powerful tool and very eye-opening, I think, really. And it's great. I've been working with Roger for probably about 10 years properly. I've known him about 14 years. I think we're very aligned what we're trying to do. And he's, like me, he's an off-the-chart creator, and he's got a great business there. And it's great to be a part of an IPO. So it's being launched on the New York Stock Exchange as part of this roll-up, which is also really exciting. My one regret is, because of COVID, I'm not going to be able to go to America, because actually you get to ring the bell when they do the IPO. That would be a once-in-a-lifetime opportunity, but I think I'm going to have to miss out on that, unfortunately. But that's why you can't have it all, right?
Yeah. Well, look, we're here today to really look at the market and, maybe some predictions from you, Simon. We're at the start of 2021. We're coming out of lockdown now, and, hopefully the future is bright within the property market. So it'd be great to get your thoughts on this today. So where should we begin?
Well, let's talk about that. Let's talk a little bit about the market in 2020 and 21 and maybe 22 as well. And I have to admit, first of all, Christian, I was wrong, because I thought that actually the end of 2020, based on what was going to happen, i.e. furlough ending in October 2020, I was pretty sure that we'd see the market dip at the end of 2020. But obviously, as we know, the government responded to the Bank of England prediction, because the Bank of England was saying they thought property prices would come down 16% in 2020 due to the COVID pandemic and the recession that happened as well. And the government obviously responded to that, and they introduced the stamp duty holiday, which was initially to end of March 2021. They extended furlough again to March, April 2021. And that really propped up and stimulated the market, as well as all the money in the economy because of the bounce back loans and civil loans. That's why we saw the boom. And then obviously the budget that the Chancellor did in March 2021 extended the stamp duty holiday up to 500,000 for 3 months and up to 250 for 6 months. Also then extended furlough to September 2021. So I think it's what I was saying might happen a year later, because with the booming prices, after every boom, there's always a bust. Now, I don't think it's going to be as bad as we saw in 2007, 2008. There were very different circumstances then. But I think prices are really high. And, although there's been this demand, it can't continue forever. So my gut feeling is at some point, prices will certainly level off. I think they'll probably retract a little bit. But who knows what's going to happen. But it's interesting, Chris. Sometimes people say, should I buy now? Should I wait? I have quite strong views on this. And my views are, as long as you know what you're doing and you do your due diligence, rather than trying to guess the market. Because to be honest, Chris, no one really knows. We can guess and hype. I mean, the Bank of England, for God's sakes, who've got rooms full of statisticians and economists, they thought the market was going to come down 16%, which I thought was a pretty accurate guess, estimate, whatever. They were wrong as well because of the government intervention. So you never really know. And if you're waiting to buy until something happens, you might end up waiting a very, very long time. So I believe if you follow the golden rules I talk about in Property Magic, golden rule number 2 is buy in an area of strong rental demand. Golden rule number 3 is make sure you make positive cash flow. And golden number 4 of the 5 rules is make sure you buy for long term. If you follow those particular 3 rules, it doesn't really matter when you buy. If you buy now and then the market comes down a little bit, well, as long as you can rent it and you're making cash flow and you're not planning to sell, you haven't lost any money. It's people who have to sell when the market comes down. They're the people who crystallize the loss. So as long as you can afford to hold long term, it doesn't really matter. It's about doing your numbers, doing your research as much as you can, making sure things stack up. Buying properties such as HMOs give you a much better cash flow, so you give a much more kind of a buffer there in case that we have difficult times or interest rates go up. So, by educating yourself and just taking action, property investing should always be seen as a long-term investment. So don't really worry about short-term fluctuations, is my view.
Yeah. Now, Simon, we talk about 7 pillars, right? There's 7 different ways to build wealth. And we're talking about the property pillar today specifically. But within property, there's so many different strategies, and this can lead to overwhelm for people. So,
absolutely.
What are some of the strategies that you're seeing right now which are working particularly well?
Okay, so it's interesting. And I think things go in waves and trends. And we're seeing at the moment right now, a lot of city centre apartments are struggling to rent because a lot of people have decided, actually, I don't really want to live in a small box close to the city centre, because if the city centre's closed. So last year and for the last 12 months, we've seen a lot of people migrate out to more, I wouldn't say countryside, but certainly more rural areas, not such big metropolitan areas, where actually they've got a bit more space. People are preferring houses that have got gardens rather than flats. And I'm actually renting a really very nice apartment in Birmingham while I'm waiting to buy something. But actually, my wife, she wants a dog, she wants a pet. And it's not really ideal in a first floor flat. So we're looking for just a small house temporarily and trying to find something good on the market for rent. There are a few things, but they're just really not very good at all. Anything good just goes like that. And so I think there's a really strong demand for houses at the moment. And actually, having investing for 25 years, Chris, I've got houses, I've got apartments, I've got single lets, I've got multi-lets. My personal belief is that apartments generally don't see as much capital growth as you do with houses. So I think there's a couple of really big distinctions here. One is, I think freehold houses are probably generally better than leasehold apartments. Apartments are very popular generally, and they're nice and new, low maintenance, etc. But I think houses have got more potential for growth, and obviously you then don't have a service charge to pay the freeholder as well because of your lease. So that's why I prefer houses. Then within that, obviously you could do single let properties, and I think that's where most people start. Probably about 82% of properties are single lets, and it's a more basic introduction. A more advanced strategy is HMOs. And a lot of people think, well, let me start with a few basic properties, single lets, then go to HMOs. And I get that logic. But actually, once you educate yourself, you understand that an HMO, although it is different from a single let, you need to know certain things. It's not that much harder. So rather than tie your money up in a single let property that might make you, £100 a month, give you a 5% return on investment, which is still better than the bank, actually, want to put it into an HMO, which might give you £1,000 profit a month or more, and might give you a 15 to 20% return on investment. I know Kevin's very keen to talk about ROI, return on investment, in all of the pillars. And actually, in property, it's great because you can really increase your ROI by using other people's money, primarily using a bank. Most investments, you can't borrow money to invest, where property, because banks know that property is probably the best long-term, safest investment, they're very happy to lend. So straight away, you can borrow someone else's money, 75%. And then the 25% is where a lot of people get stuck but that could also be someone else's money. As we know, it could be someone's money from a pension, from a SAS. It could be you've got family members who've got money in the bank doing nothing. Maybe you inherit a property, you could refinance that, use that, some of that. So there are so many different ways to fund your deals. It just comes down to being creative and not accepting the beliefs that we've maybe grown up with. People seem to think, actually having debt's bad. Well, anyone who's read Rich Dad, Poor Dad will understand there's a difference between bad debt and good debt. And actually good debt is something where you buy an asset. So you're borrowing money to buy an asset that's going to go up in value over time and give you cash flow. So an asset puts money into your pocket and a liability takes money out of your pocket, based on the Kiyosaki definition, which I completely buy into, and I know you do as well.
Yeah. And so just touching on that point of like diversification there, Simon, I mean, obviously the last 12 months with the situation we've been in, perhaps people who had all their eggs in one basket, and one example might be serviced accommodation, right? Airbnb.
Absolutely,
suddenly, it was hit very, very strongly. So, any words of advice there?
Yeah, it's always worth diversifying. So I think you should diversify in your strategy. So you might have some single lets, some HMOs, some serviced accommodation. And it's always smart to make sure that if you can't use the property for one particular strategy, you can pivot and use it for something else. So for example, if you have serviced accommodation, which was very badly hit last year, because basically it's usually for holidaymakers, tourists, and also for corporate clients who might be working away from home. They don't want to live in a hotel, and they live there, from Monday till Friday, go home at the weekends. And it was particularly hit when suddenly all the bookings kind of died. But many of my clients, what they pivoted. They changed the marketing, and some of them were marketing them as isolation units. So people who were on front line and they didn't want to go home and potentially take COVID-19 back to vulnerable family members, they needed units that were close to where they were. And people adjusted their prices down to make it affordable. But it's all about pivoting. And that's the value of being in a community, in a group. If you're trying to do this on your own and work it out, when something like COVID hits, mass panic for most people. But if you're in a community and you're learning from other people and seeing what they're doing, you don't have to figure it all out yourself, which is really important. And actually, it was hit massively last year, but I think anyone who's got serviced accommodation or still got it this year, I think we're going to see a massive boom in the summer of 2021 as many people want to get out of home. And in fact, I don't know if you've tried to go and book. I've tried to book a few hotels for some time away, and everything is so expensive, even if they have any availability left. So these things go in cycles. And I think the important thing to remember is that as long as you can afford to hold the property, that's the key thing. You ought to cover all the base costs and recognize that sometimes you will have ups and downs. And I completely agree, diversifying not only in the type of property, but maybe also in the geographic location. You don't have to have all your property in one area. You might have in different cities, different locations, because then you're really diversifying within the asset of property.
Now, you mentioned there, Simon, you've been investing for 25 plus years. Now, we probably didn't have social media back when you began. We didn't have the leverage points that we have today, the number of strategies. If you were to wipe the slate clean today and learn from the last 25 years, what would you do from point now? So someone listening now who's kind of right at the beginning, how would you do it?
Okay, knowing what I know, which I wouldn't have passed on from the beginning, but I would advise and I would start with purchase lease options. A purchase lease option is where you basically control a property. You don't own it, you control it. And you have a management agreement whereby you rent it from the owner and then you rent it out at a higher rate. So you make cash flow on a property you don't own. But also you have the right to buy that property in the future if you want. You're at the right but not the obligations. You don't have to buy it at a price you set today. So you can get cash flow and equity growth from a property that you don't actually own. Now, the great thing about this, and it's not really a strategy, it's more of a tool. It's a tool that can be used in conjunction with every other strategy. You can use a single lets, HMO, service accommodation, commercial property, commercial to residential conversion. It works with everything. And it's really just a way of actually acquiring property where you don't need a big deposit and you don't need a mortgage. So if I lost everything and started from scratch, that is what I would really focus on. Now, the problem with all these things, it's a tool that works in some circumstances, not all circumstances. And sometimes people learn something and they think, oh, great, I'll use this all the time. and it's not appropriate. And they try and use that tool to fix a problem for a seller, and it is not the right circumstances. The seller says no. And so the investor incorrectly thinks, oh, that doesn't work. Well, no, it's just they've used the wrong tool for the wrong job. So I'd start with options, but I think getting a broad understanding, you don't need to know every strategy, but really understanding the strategies is a really good idea, because then you can pick the strategy that's going to be right for you. So we have one of my courses, I'm not sure if you've done it actually, my 3-day mastermind accelerator, which we get everyone who comes on my mastermind program to do. And it gives a really good overview of all the strategies so people can work out which ones they specifically want to focus on. And then they hit the ground much, much quicker. So options is where I would start, probably using them with HMOs. Because HMOs are the quickest way of replacing your income. And, you can make more money with serviced accommodation, but as we've seen, serviced accommodation can get hit by changes in the economy. Whereas I think there'll always be a requirement for people to live in cost-effective housing, which is what you offer with HMOs. And I think whilst there is an oversupply of HMOs generally in the market, if you go on spareroom.co.uk, which is the main website people use to advertise their HMO rooms, you'll see that most HMOs are very, very average. So whatever strategy you use, you need to do it to a really good standard. We make sure you're better than the competition. And, if you have a really good quality HMO, a high-end HMO, they're much easier to let. You have less void periods, and you get a much, much higher rental income as well. So it's PLOs and HMO is probably the thing I would start with.
Now, one of the areas that we obviously work together closely on, Simon, is around SaaS pension, leveraging your pension.
Yes, absolutely.
You've worked with WealthBuilders on your own SaaS as well.
Yes,
and, again, pulling us back to kind of current conditions and where things might be going in the next 12 months. And if funding from the institutions becomes a little bit harder to get hold of, then there's no better way than obviously self-funding, right? And so many people have got pensions which perhaps are not being leveraged. They don't understand the power of SaaS. Any kind of thoughts from your side as to how this can really help people to accelerate?
Until I met Kevin Whelan, I didn't really understand SaaSes. I didn't know, and I think Kevin had to explain about 3 times for me to actually get it right. So it is a bit of a can be complex subject, and there are very strict rules about what you can and can't do, obviously. So it's really important to get some really good advice, as I did through Kevin. But I had my pension at Cadbury's. I was only there 5.5 years, so it wasn't a huge pension. But I thought I could probably do a better job with that pension than Cadbury's could. And obviously I set up a SaaS attached to my business, and I've got a good profitable business. I was putting profit into that. So I've got a reasonable sized fund that's kind of growing, and I've lent it to other people, other investors, and I've borrowed other people's SaaSes. And I think, that the problem with SaaS is people only partly understand it, and they get the wrong. They think that if you borrow money from someone, you always have to offer a first charge. Well, that's not actually correct. If you use your own funds, you can use up to 50% of your fund. You do need to give a first charge security, but you can lend your money to someone else, and you don't need to get a first charge. You need to be happy with that person. Obviously, they know what they're doing, and the security there. After all, it's your pension. You want to look after it. But I think understanding how it works is the first step. And the other thing is that a lot of people have a number of pensions all dotted around that don't really amount to much. But if you pull them together, suddenly that might be quite a large amount of money. And you don't have to wait till you're 55. You can access it a lot sooner than that, as long as you're following the rules. So yeah, I would encourage anyone who doesn't know to reach out to Kevin, to reach out to you and find out about it, because it's a very powerful tool.
And I know Kevin's been doing the online conferencing. How have you had to pivot in the last 12 months with your business and, change things around?
You know what? I kind of thought that actually business would be a little bit quieter because of the pandemic and working from home, etc. But we had to pivot from effectively a company that does live events. And we had 500 PIN meetings every single year, plus about probably another 80 or so live in-person training events. So almost 600 events. And that took a lot of time to pivot. And thanks to the help of all our incredible PIN hosts and also our PIN HQ team, it was pretty much seamless the way we moved. And in fact, we decided to move to virtual before the lockdown was announced because we could see what was happening. So I think looking at what's going on in the market and trying to predict and anticipate a good thing rather than responding when everything's happened. So we were kind of ahead of the game, which is good. And actually, you know what? Virtual events, I think, are incredible, Chris. I do love physical events, and we're going to go back to physical events when we can. Probably May time, we're going to start doing our masterminds. We're going to start doing our 3-day mastermind accelerator in August as a physical. But I've got a big event in September, which is Property Magic Live. And we might do a little bit of a hybrid. So have live for some people in the room who want to be there live, but also make it virtual. Because one of the benefits of virtual events, Chris, I'm sure you've seen this, is there's no traveling time or no traveling costs, no accommodation costs. And we've actually increased the number of people who are on our training events because they've been virtual. And we've had people from all over the country who maybe wouldn't normally travel to Birmingham, to London to do events. And we've even had a lot of international clients, especially participate in our PIN meetings because they want to connect with local people on the ground who can maybe do some running around for them. So here's a big tip, guys. If you've got to the point where you've run out of your own money, but actually you're good at finding deals, and that's really important to learn how to find good deals, go to the Property Investor Network virtual meetings. There are people there who are there. They're not based in that area. They have money. They want to invest in the area, but they're looking for people like you on the ground in the area. And you could do joint ventures. You could source deals. So, you know, with every big cloud, there's always a silver lining if you're creative enough and you sit there and think, what can I do here? Rather than just saying, oh my God, isn't it terrible? We can't have live events.
Yeah. Yeah. And of course, you know, we know that it's been super tough for so many people over the last 12 months. But as you say, you have to look for the silver lining there. And it's forced people to, you know, it's given people a wake up call, right? They've been doing the same thing for a long time and they've had to think differently now. And that's had many positive effects.
And you're absolutely right, Chris. We need to acknowledge it has been a really, and I think, you know, for everyone, myself included, mental health has been a real issue. You know what? Looking at, you know, the uncertainty about, well, when are we going to get back to real life? Are we ever going to go back to life as we knew it? Probably not. And for someone who, I love to go on holiday, I love to go out for lots of meals and things, you know, being restricted has almost felt you've been in prison. You know, we've had a lot of our rights taken away from us. And that has, you know, people on furlough have an uncertainty about jobs. So it's been pretty bad for a lot of people. But you're absolutely right. There are some key things that have happened. First of all, I think a lot of people have had that wake-up call to realize that actually, if you just have one source of income, which is maybe a great job or maybe got a really profitable business, something could happen that's none of your fault, that no one could predict, that wipes out that job or wipes out your income. So it's critically important, more than ever before, to have multiple streams of income, diversified. So if something happens to one of those streams, you're not adversely affected. So that's one thing. Secondly, I think actually it was great to see that how many people felt a real community spirit. Do you remember when the first lockdown, we were going out on a Thursday and applauding the NHS and people were concerned about their neighbours and make sure everyone was okay? And it was great to see that real community spirit. I think maybe it'd been lost a little bit. Also, I think people were taking advantage of the time at home, locked in. So, you know what? Maybe now is time to up my skill and not be just reliant on that one source of income. So we had a lot of people join our online training programs and use the opportunity to upskill. In fact, you know, a lot of people were smart. They were buying lots of online training because they reckoned that online training programs, everyone dropped their prices. We dropped our prices. We were making sure that it was cost effective for people. And I tell you what, Chris, when we go back to live events, we're going back to the full price because hotels are going to be so expensive. We've got to do that. So smart people were saying, you know, let's buy training courses. Let's buy education while they're below market value and getting a whole load of courses. And they're all online. They're all access for them forever. You know, getting the training and working through it, you know, using the time where I'm just sitting binge watching Netflix. Why not binge watch them? It's going to stimulate your mind and give you knowledge and education to take you up to the next level. So we saw a lot of that and we adapted really quickly. And I think you're right. You know, we probably never would have gone to the virtual events, the so much stuff we do online now if COVID hadn't happened. And actually, it's helped us grow our business. And that's one of the reasons Roger Hamilton's approached us. We've known them a long time, and their business, they always wanted to do an IPO. And actually, online education businesses have a very high multiplier at the moment. And so he's been able to come and buy my business for a really good sum, but he's still making money doing that. And the whole merger and acquisition play within businesses, I find fascinating as well. That's happened because because of COVID. And I think, unfortunately, one of the casualties, there are many retail shops and bars and restaurants that aren't going to make it. And that's a real shame. But guess what? Other ones come in, they fill the gap. And I think what was probably going to happen over 10 years with the high street has probably happened over 12 months. It speeded up the process. The shops that weren't really performing so well are going, and it's making way for a new wave. And actually, anybody can sit at home. Anybody can set up an internet business if they have the desire to do it. And I think it's, there's always an opportunity if you're looking for it. You can either focus on the negative, focus on the bad things. And I don't want to take away, it has been pretty stressful. It's been pretty bad for people. But there comes a time where you have to accept personal responsibility and say, you know what? Although it's a difficult situation, what am I going to do about it? How can I do something to make my situation better for me and my family and my loved ones, and be a victor rather than be a victim?
And you've trained thousands, if not hundreds of thousands of people over those years, Simon, as have we, not in as large numbers. But the one thing, you can provide people with the best education, the best roadmap, the best system. But if they don't have the drive, the desire inside them to make it happen, then the best training in the world won't make a difference. So any key tips that you've observed for our listeners as to what's the difference between those that really make success and those that don't?
You're absolutely right, Chris. You can have two people do exactly the same training and someone goes and smashes it and someone doesn't really do anything. And I think there's a couple of factors that influence that. Sometimes it's just timing, the stuff going on in life, and you don't really, if you don't go through the training, that's knocking you out in the first place, right? So if you invest in training or have some course, you've got to actually make sure you go through it and go through all of it. Don't skip it. Go through the whole program. That's the first thing. But then to actually implement, that's the important thing. Knowledge is great, but if you don't implement, it's kind of useless. So to actually implement it, there are a couple of things you need to do. First of all, Chris, I believe everyone needs to get really clear on their reason why. Why do they want? Why do they want to invest in property? Why do they want to do stock market? Whatever it is, what is that going to do for them and their family? And if you get clear on the reason why, make it a burning desire and make success a must, failure is not an option, then that's going to motivate you to spend the time and energy that you need to put in, right? Because nothing's easy. Anything worth getting takes some time and effort. And if you're looking for some get rich quick, you're always going to be disappointed. So get rich quick suggests, you can make lots of money without doing anything. Well, it doesn't really happen. You can make a huge amount of money from property. And my really successful clients have done that. But guess what? Because they focus, they put time and effort in. So first of all, get clear on your reason why, get really motivated and self-motivated. Secondly, you've got to be persistent. Sometimes it takes a while to get results. And something I see happen all the time in property. People try a certain strategy. They don't really do it properly. They dabble. They do it a little bit. Oh, it doesn't quite get the results they want as quick as they want. Or maybe try another strategy, the next shiny penny. And they never really focus. And the acronym for focus is follow one course until successful. So it's good to get an overview of the different strategies to understand what resonates best with you, then focus on that particular strategy until you get the results. And then by all means, you can do other strategies, but make sure you master one before you try and go and learn another. So I think that focus is really important. And then also, it's difficult to do things on your own. Getting a group of people around you who can support you, who can encourage you, who can pick you up when things are wrong, and also hold you to account. Because if you commit to do something, look, we've all done this. We say, I'm going to do this. And guess what? We allow excuses. Maybe they're reasons, but I'd say they're probably excuses to get in the way and stop us making the progress that we want to make, and we let ourselves off the hook. Well, if we're accountable to someone else, just a friend, or even better, a coach, because you don't want the person to be too friendly because they'll let you off as well. You want someone whose job is there to hold you to account, to make sure you're doing the things that you said you want to do, that you know you need to do, but are you actually doing them? So just to summarize that, get really clear on what you want, why you want it, get that really burning desire going. Make sure that you take action and that you keep going and don't give up and focus on that one thing till you get the results. And then thirdly, get support around you and ideally accountability to make sure you're doing the things you know you should do.
Couldn't agree more, Simon. And obviously, you have got so many different training courses within PIN, always looking at different strategies, always finger on the pulse. What's coming up and how can someone learn more from you, Simon?
Well, so we have our year-long mastermind program, which is not appropriate for everyone. It's just people who really want to step up to the next level. And we have people who are completely new to property and people who have really experienced who come on that program. But what we actually do, Chris, that might be most advantageous to most people listening to this particular podcast is every so often we bring out some of the core training that everyone in my mastermind program goes through, but we also make it available to other people who just want to specialize in that area. So we have courses on deal sourcing. We have courses on purchase lease options. That is one of my favorite strategies. We have courses on creative finance, how to use other people's money to fund your deals. And the next one coming up at time of recording this is actually our HMO training. And we only release our HMO training once a year. And the reason it's not something you can just access whenever, we want to provide that support and that network and that community. So we open up for a period of time, everyone comes in. All of my mastermind students go through that training at the same time, as well as all the people who've just paid to come in. And because there are deadlines, because there are 6 modules you get access to for life, but the whole point is we release 1 module a week, and about 10 days later we have a support call based on that module. So there's an incentive and a deadline for people to go through the videos, so they can get onto the support call and get all of their questions answered. Even if they don't have questions, they can listen to other people's questions. That's a great way of learning because other people will come up with questions you've never even thought of. And that's why everyone's knowledge goes up exponentially. And being part of a group, you see other people taking action, getting results. And that builds the belief that, hey, this really works and encourages people to move forward. So that's how we generally do our home study courses. Our options training is coming up next. And I think what we'll probably do, Chris, I've got a more in-depth training all about HMO training, beg your pardon. I've got a more in-depth training all about that. So we'll give you a link for the show notes where people can come and register for completely free 90-minute live online training with me. All about HMOs, and so you understand exactly how you can use them, and we'll bust some of the myths about HMOs. And then obviously, if it's of interest to you, you could come and participate in the home study, and all of our home study courses have money back guarantees. We'll come in for like 14 days, check them out, and if it's not right for them, or even if it's a great program and say, Simon, it's brilliant, but it's not for us, no problem. Within 14 days, you have all your money back. So we really like to take the risk away from people, Chris, and just make it if someone's interested and it resonates, make it a no-brainer for them to just give it a try. And the reason I think it's so important with HMOs, where a good HMO could make you £1,000 profit per month, well, most people, 3 to 5 HMOs would completely replace their income. And that can absolutely be done in as quick as a year or 2. So a year or 2 from now, you could replace your income from property and you don't have to manage them yourself. A lot of people worry about the increased work with an HMO. It is more work than one single let. But I don't manage my properties, Chris. I have someone else do it for me. Because the whole point is that I want to have my time free to do this, to have interviews with you and share and inspire people. I couldn't do that because if I was managing my properties myself, it would be a full-time job. I don't want to be a property manager. And I think most people listening to this probably don't want to be property managers. It's about setting up income in a way to make it as passive as possible so you can spend your life doing what you really want to do and what you're really excited about.
Yeah. And it's probably no better time now when we can start to travel and we can start to go out and look at properties again. So yeah, timing's good.
Absolutely. And, if we do go into a recession, and who knows what's going to happen, but if times do get hard, I think we'll have a bit of a boom in summer 2021. But after that, I think times might get harder when millions of people come off furlough and might be made unemployed, etc. When times are tough and people need to tighten their belts, that's when actually living in shared accommodation is actually more cost effective, and there's a really good demand for that. So, a good HMO in the right area to a good standard should always be able to find good tenants.
Well, if you could share that link with me, Simon, I will put that in the show notes and I will make sure that's in our Facebook group and everyone can access that training.
Fantastic. Yeah, happy to do that. And guys, come and give it a listen and check it out, see if it's right for you or not.
Yeah. So Simon, just before we wrap things up, is there anything else we've not covered today about where the market's at? Anyone who's listening now who's in property or just about to get into property would learn from?
There's so much we could talk about. One thing I would say is don't just think about short term. sometimes people are very short term. They don't get the results they want. And one of the things I love about property is you can literally work once, get paid forever. Now, what I mean by that, and I'm sure you know what I mean here, Chris, is that most people, they go to work, they trade their time for money. I had to keep on going to Cadbury's for them to pay me. And funny, when I left the company, guess what? They stopped paying me, which I suppose is reasonable enough, really. But my properties that I bought when I was still at Cadbury's, guess what? They still pay me every single month. And I don't have to do any more work for it. So it does take some time and effort and some commitment to get into property. Let's be really honest about that. But the time and effort you put into property in particular, you can get paid forever for as long as you own that asset. So I would encourage everyone to really think about property and what it can do as part of a balanced portfolio. You shouldn't have everything in property, but as part of a balanced portfolio, a real bedrock. And I know a lot of people at the moment who are making money in cryptocurrency, for example. They're taking that money out and using it as deposits for property because they recognize that property is a more stable, long-term investment. And if you've got family, if you've got kids, and you want to have a legacy for them, well, not only can you leave them property, which is, going to give them a huge wealth and fortune in the future, probably even more important than that is lead by example. Show your kids and your nephews and nieces that actually there are alternative ways to create financial freedom. You don't just have to get a job. Nothing wrong with jobs, working your way to the top of the corporate ladder, that's great. The problem is when you leave that good job, you're going to lose that income. You're going to live on a much smaller pension, and generally pensions are not enough to sustain you. So take some personal responsibility for yourself. Invest in some property as part of a mixed portfolio. Inspire your kids. Let them learn from your example and teach them the things you're learning from Wealth Builders as, how to manage your money and how to think about it differently. Because I was never taught that at school. And if I was, I would be doing much, much better than I am now. I'm doing okay, but it could be even more. So give that gift onto your kids. And the best way to teach them is through example.
Yeah, great words to leave us on there, Simon. Thanks so much for sharing. Always a pleasure to have you on. And I look forward to speaking to you again soon.
Thank you so much for asking me, Chris. All the best.
Well, we'll let Simon off the hook, shall we, Kevin? Because back in 2019, Simon's prediction of the market of the year ahead perhaps was not an easy one to call.
Yeah, well, look, who could have forecast what's been going on? The Bank of England themselves, predicted a decrease in property values, massively so. And I like humility among people. He doesn't hold himself out as a guru. He holds himself out as a guide. And sometimes things change. If you're a guide, the landscape can change. If you're a guide around a city, you know that things can change. The roads can change, the environment can change, anything can change. So I think he's a humble guy, and I respect him for that. But lots of things he does say though are bang on. Certainly we talk about the whole principle around service accommodation. And where that kind of fell out of bed a bit, but that's getting hotter and hotter. I'm going up to Newcastle to see my mother. It's going to be 80 this summer, Chris. And, I'm trying to find a cottage for me and my family. And wow, things are pricey these days. It's definitely getting harder to find and more expensive to find. So I'm bearing that one out. So.
Yeah. So lots more points there. Before we move on to some of those, let me head on over to Trustpilot. And as always, we like to thank our listeners and our clients and our members for taking the time to leave us a review, honest review, and Neha is our latest. And I'll read out what Neha's written. She's put, true value delivers what is promised. Wealth Builders course is very well structured and gives a step-by-step process to building wealth. It is not jargon. It has true actionable steps that are easy to understand and follow to start the journey. I'm highly impressed and would recommend the course to anyone who is serious about creating multiple streams of income.
Okay, that's a very nice thing to say. And of course, there's a reflection of some of that in what Simon had to say, wasn't it? Which is one of anything, Chris, is risky.
Yes. Yeah. I think actually a lot of parallels there really with what Simon was saying and the overall wealth building message that we talk about every week. And it is about multiple streams of income. And we know that there are 7 assets and within those assets, there's multiple different strategies. So there's so much choice. And in fact, for many people, that is one of the reasons that holds them back, because of the overwhelm.
Well, certainly, going back to that point about one of anything, the pandemic has just brought that into sharper focus, hasn't it, really? We can see the delicate, the fragile thread that hangs some people and their income together. And thankfully, we have a roadmap out of that. But nonetheless, some people have suffered and may never recover. So it's good to know that you can create a plan for yourself. So check out our roadmap or recurring revenue roadmap. Chris, you'll always give a link to that so people can see there is an easy to follow, step-by-step process to create multiple streams of income for yourself so you can become financially bulletproof. And that's really never more important than in today's more and more uncertain times.
Yeah, wealthbuilders.co.uk/roadmap is the place to download that. You can see our 9 steps. And every month we invite one of our members, actually, we shine the spotlight on our member and we walk through those 9 steps and we see exactly, and we hear in their words, how they've implemented those lessons. And more lessons then. So pulling out a few other things that Simon talked about. Well, that difference of work income versus asset income, it all comes down to the entrepreneurial mindset. And I think creativity wrapped into that as well. You are limited in a job, you kind of have a set of rules and you have to be there at a certain time. But, Simon's built a very successful business with PIN over the last 18 years. But in the last 12 months, he said himself, he had to completely pivot, had to think differently and shift all of those live events, all of those networking events online. And fortunately, the whole team at PIN adapted to that very quickly. But, even when you think you've got a great business, you just never know what's around the corner that could completely come in and change the look of that.
Well, that's a test for anybody, whether you're employed or in business. But the great enjoyment for me, certainly personally in business, is that joy of being creative, the creativity to choose a positive reaction to whatever you see. And there's always a good thing to learn that, with all of this opportunity that's coming. And there's certainly Simon signposted many of those opportunities, the changing nature of the high street, the changing nature of how people are living and what that means in so many different ways. We've got that choice. We have that ability to respond, and that's kind of our ability to respond is responsibility. So we've got responsibility to build our own wealth and not to delegate it to a third party, whether that's a third party advisor or whether that's to your employer or whether that's your family or indeed the state in rare cases. So take that responsibility seriously. Choose who you resonate with, get yourself some education, choose to get supported either from people around you or other people, and build connections and collaborations, because that's where the fun is. We've had some great times, even though it's been tough, Chris, but we've really enjoyed our response in the current situation, and we'll get stronger and stronger as well, because we know the message is bang on.
Yeah. So I think, there was a lot said by Simon there today, and hopefully, that just resonated with you, listening today. And there's always just one idea. That's all it takes, Kevin. Just one idea. It could spark something, and that can lead on to, the ripple effect, really. Just one thing can lead to great things. So hopefully there will be a little nugget in today's episode that does that for you. And we'll be back again, Kevin, next week. And next week we are talking about employee ownership trusts, which is a new topic. We've not covered that before.
Well, that's an interesting one, isn't it? I mean, we use the word trust quite a lot, not just in the sense of, we're a trustworthy organization, but Simon would have mentioned SSAS, which is a pension trust. And we often talk about putting life assurance in trust. But did you know that you can create a trust from your business, and that can bring incredible benefit to you, to your employees, but also to give you a super, super efficient tax break. So looking forward to that one.
So thank you for listening today. We'll be back same time, same place next week.
Mm-hmm. Until then, my friend, I will see ya.
We hope you enjoyed today's episode. Don't forget that we are constantly updating our resources inside the Wealth Builders membership site to help you create, build, and protect your wealth. Head over to wealthbuilders.co.uk/membership right now for free access. That's wealthbuilders.co.uk/membership.